Hello and welcome to today's show of Latoken VCTV. My name is Amit Das and I'm connecting from India. I work here as a listings manager at Latoken. Today we have investors and panel members from all around the world, and we are discussing today's topic on investments in public market, that is SPAC. So, what has triggered the SPAC in the recent years, and how is it performing, and is it the future of investment? Let's understand more on these on today's topic. So, before we begin, I want to give a short introduction about this Latoken VCTV. Latoken VCTV is a platform where investors and startup meet and they discuss, and the startups invest pitch their startup idea in front of our panel of investors, and these investors give valuable feedback to all the to your startup to reach your desired fundraising goal. So please, if you are a startup, then please come on to VCTV, because with VCTV and with our network of investors, we will be able to provide you a complete laundry list of objections that is required to reach your fundraising goal. So yeah, with this, let's begin. Let's move on towards our investor panel. We have Tushar Kansal from India, Harsh Shethia from India, and William Dew connecting us from Malaysia. Let's begin with one by one. Tushar, over to you. Please give a short introduction about yourself and the previous work that you have done so far. Thank you.
Thank you, Amit. It's been a pleasure to be at VCTV and discussing different aspects. Myself, Tushar Kansal from Consultancy Ventures. I manage an investment management outfit since the last 6 years. We invest in technology and non-tech companies as well, starting from $200,000 to up to $2 million. But we also manage investment monies of HNIs and invest upwards of $5 million across tech and non-tech companies. I worked for Deloitte & Touche, India's largest venture fund by number of deals, called Brand Capital, and was heading treasury at the Russian company Systemas India unit. I was also CFO with the distribution logistics, that's Organize Partners. In the last 6 years, we have managed to help almost 35 startups receive investment, and I am personally invested in 4 startups as on date. Good to be here after some time. Thank you, Amit.
Thank you, Tushar. That was a good introduction about yourself. Let's move on to William Dew, who is connecting us from Malaysia. William, a short introduction about yourself and the previous work that you have done so far. Thank you.
Hi, good evening, everyone. My name is William Dew from Engineers House. Today, I'm talking about SPAC. Okay, so I put on another hat. So I'm a chairman of Virtu Capital Limited, which is SPAC listed on London Stock Exchange. Okay, so we listed the company 3.5 years ago, and we have tried 2 attempts to inject 2 deals, but so far it's not successful. All right. So today I'm going to share with you what not to do and what you should be aware of when you do a SPAC. Thank you.
Thank you, William. You seem to have a good introduction, and you seem to have a good background on SPACs. So it will be an interesting discussion today. So let's move to Harsh Shethia. Harsh, a short introduction about yourself and the work that you have done so far.
Got it. Thanks, Amit. Glad to be back on VCTV and glad to be back with you as well, seeing you after a long time. So my name is Harsh Shethia. I'm a venture partner with our ventures. We raise funds for all kinds of companies. We are completely sector agnostic. We look at healthcare, fintech, SaaS, B2B, food tech, you name it. All the sectors we funded, even crowdfunding platforms, etc. So that is what we are. Our ticket size ranges around from $150,000 and goes all the way up to $10 million. Me personally, I have worked with a couple of unicorns I work with Fortune 50 companies, and currently I help startups grow as well as help them with the fundraise. If any startup needs any help, can always feel free to reach out to me. Thank you.
So yeah, you have heard from Harsh that if you are a startup and you want to raise some funding and get some feedback about your startup and your processes, then you can reach to any of our investors as well via Latoken VCTV. So let's directly jump on to the today's topic about SPAC SPAC. So yeah, let's start from William since he has worked upon SPAC. So William, what is SPAC and why SPAC? Let's start with the basic question. Over to you.
Right. We started our first pack 4 years back. Okay, so since then we did three together with my partner. We did three on LSC and one on Nasdaq Copenhagen in Denmark. All right. So all three others have done their asset injection of continuous fundraising. Word 2 is still available. Okay, so we are still actively looking for assets or new investors. Right. So let me share a bit about what is SPAC. Okay. So a lot of people, if you look at the US market today, right, just January alone, they have probably raised over 50 billion. All right. I'm not sure about the statistics now. Okay. So every day there's a SPACs happening in the US market, and the SPACs are getting bigger and bigger. Right. And however, SPAC is not for everyone. If you look at most of the US SPACs, it's usually sponsored by a big corporation, a big private equity house, or some tycoons like Richard Branson, right? So for a normal businessman, it's not easy to set up a SPAC, all right? Although the entry to create a SPAC can be very much different from the US or the UK market, but at this moment, the focus is all on US SPAC. All right. So London Stock Exchange or the other stock exchange have different view on SPAC. In Malaysia, for example, we have probably 4 or 5 SPACs created over the years. And to date, probably only one is really successful. I can't remember 4 other names on Bursa Malaysia. The rest of those 4 have to actually return the money to investors because after a few rounds of attempt to acquire assets and rejected by their shareholders, and they decided to return the capital. All right. So of course, it looks exciting. It looks big because you can see billions are raised with SPAC nowadays. However, there's a lot of factors or variables that's affecting a successful SPAC. Okay, so we are happy to see there's so many SPACs happening in the US, and we hope that when they can't find the right acquisition in the States, they come to Asia and start buying assets in Asia, and that's where we can help them to scout for good assets to acquire. I'll share more along the way. Thank you.
Yeah, thank you, William. Sure. Tushar, what are your viewpoints regarding why SPACs and how did it gain some prominence over the period of time?
While we manage private equity and venture capital, everybody, the investor is particularly bothered about how will they make an exit. And it so happens that amongst the 3, 4 options which the investor lists in the term sheet, the number 1 option is through an IPO, which means that there should be the shares of the investee company should be trading, and there should be a lot of liquidity in those shares. So at any given point in time, when the valuation of the company is good, the investor can make an exit. So investors love a company which comes out with an IPO and gets listed. Now, what happens is that in many cases, because of a variety of reasons, the IPO doesn't happen. For example, in India, one of the conditions for an IPO is that 50% shares in the IPO should be sold to retail as in individuals. So many times the issue does not get subscribed. So there are issues like that. And many times valuation is an issue. The markets are falling or some black swan event. That's where SPAC comes in. I remember an Indian company, Subhiksha, which wanted to give exit to its investors, and it found a listed company on the stock exchange which wasn't doing well, and it reverse merged into that listed company. Now, what happens in these cases is that many times the listed company which you are doing a reverse merger of your company is not clean. It has legacy issues, it has legal issues, corporate issues, tax issues. That's where SPACs come in. So SPACs are a blank check company which is listed ab initio, and later on it acquires a company, and hence there is liquidity in that company's shares. Going by the popularity of SPAC, in 2014, $1.8 billion was raised across 12 SPAC IPOs in the US. And by 2020, this 1.8 billion figure has become 83.3 billion across 248 SPAC IPOs. So why is that so? Because look at all the big investors. SoftBank wanted desperately to show exits amongst its investments like WeWork, and it could not. That IPO devolved. So SPAC is a very popular way of opening a clean public shell company, better economics for the management teams and sponsors, and a lot of financing and growth capital in place, and then doing the reverse merger. It's a better way of generating liquidity for startups, and has become very popular.
Yes, Harsh, let's move on to you. Your viewpoints on SPACs and why SPACs in the recent trends in India, please.
Sure. So I'll firstly kind of explain SPACs to the audience who may not completely understand it as of right now, right? So SPAC is a short form for Special Purpose Acquisition Company. Essentially, it's like a shell company or a fund which has been created by a private equity firm or a renowned industrialist like William was mentioning earlier. You have Richard Branson, who created one last year. A renowned private equity investor, Bill Ackman, also created one last year. So essentially, these are shell companies which are designed to acquire another company within the next, say, 2 years, 3 years, 4 years, depending on the respective regional laws, and they are supposed to take it under their own wing and then operate it, right? So that is essentially what a SPAC is. The benefit of a SPAC is that the IPO essentially has a lot of volatility associated with it, right? So normally in an IPO process, you need to get a banker involved. The banker will try to sell those shares as much as possible through the institutional network before they sell it out to the general public, right? So the general public, you never know how they might react. It can go up, it can go down. The IPO can get oversubscribed, or it can go completely bust. There's a lots of volatility associated with it, and there's lots of risk associated with it, right? So that is where SPACs come in. In the SPACs, the process is very quick. So for a company, they simply have to negotiate with a single entity instead of dealing with thousands or maybe lakhs of entities just to sell their share, right? That is the true advantage of a SPAC for a founder. He doesn't have to deal with so many entities. Just deal with a single entity, sell them its value, sell them what the company is offering, and that's how they can give their investors an exit and easily raise funds as well. Instead of going through a 6-month grueling IPO process, SPAC is definitely a valuable proposition for them. But at the same time, there's some risk associated with it as well. That if a SPAC that has been created, it has to merge with another company or acquire other company, because if it doesn't, then it completely dissolves it, and the investors get their money back, but they don't get the interest which was originally anticipated. So these are some of the risks associated with a SPAC. So that is exactly why you need renowned private equity players who have huge name in the market, or celebrity players like Richard Branson or other big name people to kind of get into this space. And for the founders, it provides an easy exit to the investors, as well as you can raise funds, so that the raising funds has become far more easier rather than dealing with hundreds of other investors. That's the biggest plus point for a SPAC.
Great. Thank you, Harsh, for a clear explanation of SPACs. So till now we have somewhat a brief idea about what SPACs is and how does it work. But let's move on to the next level of question, that is, does each company, every startup that is looking for an exit, wants to get a SPAC or they want to get into the regular process of listing. So yeah, what kind of companies do look for SPACs, and what kind of other investment firms or what kind of firms help in providing SPACs? Let's start from William.
Right. If you look at specs, okay, a specs shareholder list will consist of probably a few thousand investors, right? So when you look at a startup, okay, the investor will have a lot of questions. Not everybody will like to invest in startups. Okay, so when you present a deal or a startup deal to a spec, I think the most likely you will get rejected, right? Specs are more they favor perhaps more established asset, revenue generating business. Okay, so if you look at there's a lot of like for example, there's I can't remember the name of the electric car company. It's an EV company that will be acquired by a spec. Okay, and there's a established financial services company on the Wall Street will be injected into a spec as well, right? So all these spec are actually sorry all these can involve established business, established assets. Okay, so for startups, it's a bit unrealistic to approach spec, but if you are a startup with enough traction and you can justify the valuation and also the enough approval from the support of the spec, yes, a deal will be true. Okay, so it very much depends on the quality of asset that when you approach a spec. Okay, so but generally, specs does not look at startups. Okay, they prefer revenue generating or yield generating assets. Thank you.
Tushar, over to you. What kind of companies do look for SPACs, and what kind of firms help in creating a SPAC for other kind of startups? A brief discussion about this.
So, Amit, companies typically look for expansion, capital for expansion and for growth. And it suits the investors also because once their money goes into the growth of the company, then their valuation, the company's valuation also increases. Now, what happens is that stock market is always going, it goes in a motion of its own, and there are many times when certain sectors are seeing big valuations, and that's the best time for unlisted companies to use the stock market to get a good valuation for the capital which they are raising. I'll give you a very nice example of a company called Nikola. Just as Tesla became very hot darling of the investors, so this company Nikola, which is into hydrogen trucks, Nikola Tesla was the guy who discovered electricity, and they opened Nikola, and the company Nikola, it reverse merged into a listed shell entity, and the valuation of Nikola increased to $34 billion. I mean, we are talking about a company which does not make a single dollar of revenue, reaching a valuation of $34 billion. So this is how companies like to take benefit of higher multiples and higher ratings of stocks on the stock market. Now, to SPACs, SPACs have been around for decades. They are essentially blank check companies, and they offer a very good corporate governance framework because the investment banks, they before getting the SPAC listed, they do their due diligence and they meet all securities regulators guidelines. So it is a very clean way of raising funds. And the sponsor entity of the SPAC, it has its skin in the game, and the 20% of the capital of the SPAC is put in by the sponsor. So it is a very nice way of raising 80% of declared funds and operating a clean company and making an acquisition which with proper disclosures and taking advantage of the valuations prevailing in the stock market. Just like look at Tesla. Tesla is doing around 5 million cars only and made a very small profit only recently. And its valuation is close to 850 billion dollars. Now, this is a time when SPACs come in. They have acquisition targets in mind, like the electric vehicle players, and they would raise dollops of cash from the stock market and then go on to purchase these EV companies. So this is how the benefit works. And I would say that there are many startups in India which can be a very attractive target of SPACs. And some of my clients in Israel and Singapore are also looking to raise money to get acquired via SPACs. And we would be welcoming any such SPAC which wants to acquire tech companies of good size in APAC region, Middle East, US, or UK.
Great, Harsh. Over to you. What kind of companies do you look for SPAC, and what are some of the risk factors that are involved in SPACs that a startup should avoid? Over to you, Harsh.
I'm sorry, I could not get the last part of the question. I couldn't. The voice was cracking.
Sorry, yeah, Harsh. So let me repeat. I wanted to ask what kind of risk factors are involved that a startup should see or a company should see to before getting into the SPAC.
So there are not particular risk factors for a startup to get into a SPAC, right? Because the deal is pretty simple. The SPAC will kind of give a specific valuation to the startup, and they have to decide if this valuation they are comfortable with or not. And it's a plain vanilla negotiation. So it's not there's not too much risk for a startup. The only major issue over there is primarily in terms of the commission and the transaction fees which are involved, right? So normally a typical IPO it ranges from 5% to 7%, which the bankers charge, right? In this case, there are multiple such variable elements involved. For example, if you want to raise a SPAC, that time you have 5 to 7%. Then when a startup wants to get acquired by a SPAC, another percentage is charged. So all the way the entire acquisition cost can go up to 15% or even 20%. So that is the bigger issue over here. That if you raise say $1 billion, through if the SPAC is for $1 billion, you want to sell the company for $1 billion or get acquired for $1 billion, 20% of that goes into all these fees. So that is one of the major issues which the startups need to look at. As far as rest of the things, it's not that complicated actually. And SPACs is something. It's not something which the startups raise themselves. Startups are they reach out to the SPACs to get acquire them, and it acts like a prelude before their IPO. So as Tushar was mentioning the point regarding corporate governance, right? So instead of a startup who do not have the kind of corporate governance and other nitty-gritty skills involved to take it to that level, they can use a SPAC as a good opportunity to not only provide an exit to the investors but also understand how the corporate governance and all the other processes which are involved, which are there, understand those, and then within maybe a year or two, they can look at the IPO at the final stage.
Great, Harsh. Coming back to the corporate governance side, what kind of corporate governance is expected before reaching out to SPAC? William, can you briefly describe about the corporate governance side of the things?
You mean corporate governance on the spec itself?
Yes.
Yep, spec is actually a proper IPO, just that it doesn't have a business inside. All right. So the as a board member, I need to make sure that the deals that are presented are ready. Okay. So it's like we need all the information. For example, valuation of the company. We need to know who is behind the company operation. It's almost like a full due deal on the company. Okay, we will actually hire third party to verify all the facts and figures presented by the companies. So we will not go into any agreement if we find that the companies are not suitable, because once we go into agreement, in most cases we have to suspend our spec. Right, the company go into suspension, and the company will not be able to trade until the deal is approved. Okay, so we try to avoid that unless the deal is sound. So on the surface, if you read from Google and everything, it seems easy, but in reality, as a board member, we need to make sure that all the deals presented are sound, okay, and how to justify a sound deal, all right? So we need to hire third party, like for example, accountants and lawyers to go through all the numbers. So every time we go through a process, we burn money, all right? So for our spec, we started with £1 million. Every month I sign what, 30,000-40,000 pounds out as expenses. Okay, every year we spend about 250,000 pounds. I think to date we have spent around £1 million already. All right. So as a spec sponsor, you need to be sure that do you have the budget or do you have the stamina to run it? Okay, it costs money to be listed, regardless whether it's London Stock Exchange or Nasdaq or even IC. It costs money. All right. So if your investors are retailers or retail investors, they may not have the stamina to keep up with the delay. Okay. And at the end, that's why you see a lot of SPAC have to return money to investors. Okay. So if a startup come to us, before we go to the process, we most likely will say, come back later on when you're more established. Okay. We wouldn't want to waste their time, because once we initiate a deal, it will cost us money. All right. So as on governance side, we have to make sure that the deals are ready before we present to our shareholders. Okay. So the shareholders may not share the board's view. Okay. So we need to be very prepared, and most of the time the shareholders will question us. Are you sure about this deal? Have you done enough homework? Okay. So that's why you see at the end of the day, probably, I'm not sure about the statistic, but like Malaysia, 80% of the SPACs have to return the money to investors. Okay, so for sponsor, for business person or investor who want to sponsor a SPAC, make sure you got the facts right. To list on a SPAC in the US market will cost you 1 to 1.5 million US, depending on the set of advisors that you choose. Okay, and also very important is the size of the SPAC. Okay, so a minimum size you need is actually 50 million US. Okay, so for a broker or a sponsor to be taking your deal, they also need to verify that you're a sound person or you're a qualified person to lead a SPAC, right? So there's a lot of variables that will affect a successful SPAC or not. Okay, so and that's before you create a SPAC. Once you create a SPAC, once you have the money, there starts your nightmare as well. So it's not an easy process. Of course, it's a very exciting process, right? Thank you.
Tushar, what do you think about this kind of thing, and what is the sentiment on Indian investors and Indian startups regarding SPACs?
Amit, I fully appreciate what William said and Harsh also said. I would like to add my two bits here that there has been an explosion in the growth of unicorns. So there are a lot of companies and big investors who feel that keeping a company private is better, because when it is listed on the stock exchange, then it is prone to macroeconomic factors, and it is prone to fluctuations in its valuation. So that's why they feel that it's better to keep companies, and that has led to a scenario where where an unlisted company has a $47 billion valuation like WeWork, and its peers who are listed, because they are listed, they have less valuations, and they are susceptible to volatility. But the explosion of these unicorns, which means companies with more than $1 billion valuation, has meant that a lot of investors' money is stuck. End of the day, they need an exit, and some smart guy figured it out that all these unicorns will eventually head to the stock exchange, and it is the right time to put money in SPACs, raise money through SPACs, and then give these companies an exit. I would say that it's a welcome way of bringing in liquidity into all these valuations. A lot of these valuations are actually mark to market, and hence they need to be validated by getting a proper valuation established on the stock exchange. Also, the explosion in multiples at which a lot of these listed companies trade has meant that there is a lot of liquidity sloshing around. It's central bankers and governments across the world have printed $12 trillion in the last 1 year when COVID hit the market. And a lot of this money has entered into speculative trades. And that's why we see a company like Tesla, in spite of hardly making a small profit, getting a valuation of $850 billion. So some people say that these valuations are divorced from ground realities. But whatever said and done, the investors are loving it. The retail individuals who trade on the stock markets by Robinhood and by Zerodha, and using these free apps, they are loving it because valuations are high and everybody is making a killing. We have seen how Bitcoin has gone from $20,000 to $40,000 in a span of 6 months. And I see that SPACs will continue to be used more for the clean approach they bring to these unicorn startups. And because they ensure corporate governance, they ensure a lot of compliances of the regulators, they will continue to explode in the near future as well.
Yes, thanks, Tushar. Harsh, do you want to add something to this topic?
Yeah, definitely. I completely concur with William's point, right? So the SPACs have definitely been glamorized last year with almost 70 $80 billion of fund being raised, but it's not easy to raise a SPAC, right? So what happens is if someone raises a SPAC, you have to answer to the shareholders, you have to answer to the board. They need to have their own corporate governance. You need to get government approvals, the financial central bank approvals. It's a long process. It's not an easy process. It's a complicated process for someone to raise a SPAC, and for a country like India, if it is being raised by someone more influential, like probably like a Ratan Tata or a Narayan Murthy, it becomes more easy. But otherwise, it becomes very difficult for a SPAC to be created, right? So these are some of the limitations that we face in India for those kind of challenges. At the same time, you look at the nature of the investor of the other shareholders. So that is why it tends to become a huge risky proposition that you have to put a money in an empty shell. You don't know what the company is like, and turns out 2 to 3 years down the line, as William was mentioning, that you have to turn down the SPAC. In Malaysia, around 80% are apparently being turned down, right? If the same thing happens in India and the investors end up losing money due to that, it becomes a extremely problematic situation. So that is why the SPAC market is still there's still a lot of scope there. It still needs to mature a little bit to kind of get a bit more understanding. However, the benefits are definitely there. A lot of startups are still not ready for an IPO, even if they're valued at a unicorn and they're making money. Uh, to be a public IPO, the skill sets required to manage the corporate governance, to manage the shareholders, and the nitty gritty is completely different, right? That is why you see these premier B schools like Harvard, Stanford, etc. They have a specific executive leadership program with 20 years of experience to manage specifically the requirements which are there over there. The board management is a challenge, shareholder management is a challenge, and the requirement at that level is completely different in managing a startup. So I see SPAC as a good bridge point before actually going for an IPO for a startup.
Awesome, awesome, Harsh. So back to the basics. I This question which I'm going to ask may sound very very silly, but hey, from a new point of view, I want to ask this question uh, to just clear out the understanding of SPAC. So basically, if the shell company has pumped some money into the SPAC, and it is targeting for a clean tech company, for a green energy company. So is it possible for two startups that that can get merged into one, like two competitor companies that can get merged into one and emerge out as a single company, acquiring for the SPAC? I hope you understand what I'm trying to ask here, William. Did you get what I asked?
Yep, yep. See, there's no hard rules on what you can do on a spec. Okay, first you need to satisfy the board. Okay, after the board agrees and to proceed the deal, then you get your shareholders or investors to support you or vote for the deal, right? So there's no so-called hard rules on that. Okay, but don't forget, even if your before you get to the shareholders get to vote, for example, in the London Stock Exchange, the UK listing authority will come into play as well, right? So both London Stock Exchange and UKLA will assess and evaluate the deal, right? I'm sure in the US market it is the same. Okay, so you have to very much treat a SPAC process or the injection of any business, whether you call it reverse merger or reverse takeover, okay, or asset injection, you have to make sure that they are actually basically ready for an IPO process. All right. The difference is the money is already in the SPAC. Okay. So if the authority, listing authority or the sponsor, okay, and your shareholders agree with it, yes, the deal goes through and everybody is happy, right? So there's a lot of disappointment from the shareholders ourselves. Okay, we have experienced two deals. Okay, which has failed two times. Okay, so when we want to initiate the third deal, or even the fourth deal, we will be more cautious, right? Our shareholders or our investors will not be so excited anymore, and it makes our life more difficult when we want to present another deal to them. So, as the chairman of the company, I have to be more prudent. I have to be more selective. Okay, so that slows down the process. Okay, so but we also need to make the decision at the end of the day whether we want to continue the spec or not. All right. So, regardless of the deals that we are going to acquire or look at, it still very much depends on the merits of the deal. So if two competitors can merge together and it create value and make sense, yes, we will do the deal. All right, thank you.
Great. Thank you, William. Tushar, you want to add something to this?
Tushar, you're on mute.
Yes.
Yeah, sorry. So, just like I gave the example of Nikola came out with, a business plan of manufacturing hydrogen trucks. And it saw that Tesla's valuation multiples were crazy. And it merged with, merged with a SPAC, and its valuation ballooned to $34 billion, whereas Nikola itself said that the first the first revenue they will make would be not earlier than end of 2021. So this shows the the benefit which unlisted companies can take via the SPAC route. Now, if people were sitting at homes during the lockdown, they were getting cash payments from their governments. A lot of subsidies were given. $12 trillion were printed. People were being paid at home. They didn't have anything to do, so they latched on to their Robinhood accounts and started trading. A company like Amazon, which saw 40% increase in its revenue, its valuation increased from $1 trillion to $2 trillion. So, what I'm trying to say here is that markets have their own momentum. And if the market is having those kind of valuations, it is good for a startup to take advantage. And what better way to take advantage than through a SPAC, which is a clean way of doing getting liquidity in the company's shares. I agree that the charges for raising funding via a SPAC is quite high. The investment bankers' fees 10 to 20% is quite high. But if they are offering you a great valuation, then I don't see any harm in it. Companies, EV companies like Lordstown Motors, XL Fleet, Nikola, Canoe, and Fisker, and there were many companies who, after increase in Tesla's share price, they came out. They agreed to be acquired by SPACs, and so this trend is only likely to increase. We have the $100 billion Vision Fund, SoftBank Vision Fund itself invested in a number of companies which whose valuations have crossed the unicorn stage, and just like $50 billion was raised via SPACs in the last 1 year. So we are likely to see more SPACs coming out. Now there is always a rivalry, so to say. It's between the world's number one economy and world's number two economy. So we have a lot of Chinese companies like Alibaba, which I think they got listed on US stock exchanges because they were getting a better valuation. So nowadays, wherever you are getting a better valuation, you will choose that. And in case a SPAC is offering you better valuation, definitely you should choose that. And from the point of view of an investor as well, acquiring an unlisted company via a SPAC and getting the advantage of valuations and liquidity in that company is most welcome. And I foresee that a lot of Asian assets will also become very attractive for SPACs maybe in this year, and not only the US assets. So because one condition for these SPACs to acquire any non-US company is that the accounts of that company should be stated in the US accounting norms. And if the company is meeting those compliances, then I foresee that a lot of Asian companies as well will take that route.
Great. Harsh, do you want to add something here?
Yeah, so your question was focused on mergers, right? Can comparative companies merge to the SPAC route? Am I right?
Correct.
Got it. So obviously, for a SPAC, merging two competitive companies would definitely make a lot of sense, right? Because that way, once you become a sole player in the market, the kind of valuation upgrade that you get it's ridiculous. So if you have like five competitors in the market, each of them would get like a 10x multiple on the revenue, or a 15x multiple on the revenue at best. But once there's a single dominant player, and a single SPAC has acquired say 3 4 of these merged companies, the valuation multiple which they can get can easily go like 50x, 70x, or even 100x, right? You look at Zoom is trading at a 75x of their revenues. Even Amazon is scaling at a tremendous upside, a tremendous x on the revenues as well, right? So it definitely makes sense in those terms. However, we need to look at in terms of regional laws as well, because a lot of regional laws including in India, they kind of they want to stimulate some competition in the market, right? They don't want to create a monopolistic situation where a single entity holds all the competition, and then with the help of that monopolistic power, they will increase prices which can create a harm for the customer. So that is why it is going to be a very local thing. It's very hard to say that across the world SPAC is going to be like this, because there will be lots of rules and guidance, and even SPACs, even though they're actually decades old, but they weren't used very prominently till date. Right now, they're started to get more prominence ever since last year, right? So they are still at a very early stage in terms of what the regulation would look like. And over the next few years, we will see a lot of these laws being coming into place, and a lot of regional variation we'll see, where each country will kind of, determine what their SPAC will look like, whom should get access to it, which companies can merge, which companies can demerge, and what kind of areas they can get into. A lot of these regulations are still to come up, and it's definitely an interesting time to see how the SPAC evolves in the coming few years.
Awesome, Harsh. You actually highlighted few important points, regarding the local laws and regional laws. which added really good, like what complications are still present in the SPACs. Our viewers are really enjoying this show. I definitely enjoying this show because understanding the various prospects of how to get into SPACs is really interesting. Saying that, Tushar wanted to add some points here. Tushar, please go ahead.
Yeah. I wanted to, talk about the possibility of SPACs getting approved to acquire targets in India, or SPACs being approved on the Indian stock exchanges. So, what has happened is that the stock market approach of the regulator here in India is little bit on the conservative side. So, a company which has to list on the Indian Stock Exchange, they have to be making profits in the preceding 3 years. And if they are not making profits in the preceding 3 years, then there has to be a valid justification in the red herring prospectus, which the iBanker has to provide. Secondly, 50% of the proceeds of the IPO has to come from individuals and not from financial institutions. So this has meant that in case the 50% subscription doesn't come through, then the IPO devolves, like the IPO of Imar MGF, which had devolved many years back. And companies are really scared of their IPO getting devolved because it brings a really bad name to the company. And so SPACs, the stock markets are shallow, little bit shallow here. I mean, in case the financial institutions decide to move $10 billion in or out of the Indian stock markets, then the Sensex, the exchange, has gets a lot of volatility. So that kind of money moves the market quite a lot. So given by the amount which SPACs have raised in the US, if they were to be allowed in India, as Harsh rightly said, it can create a monopolistic kind of situation that a SPAC is acquiring the top 3 or 4 companies within a sector and becoming a monopoly player. While it would give a lot of advantages to the investors of the SPAC in terms of high ratings on the valuations, but such an activity would probably not be liked by any regulator, whether it is European regulator or Indian or Chinese or whichever regulator. And hence, we are yet to see SPAC kind of activity in India. Amit?
Thank you, Tushar. So yes. So with extension to this question regarding regulations, I want to ask another yet silly question. So in China, we have super app culture. Like Alibaba, there is a super app which holds other apps as well. So can we expect such kind of culture, super app culture in India and other parts of the world, where for online entertainment platforms, we have Netflix, we have Amazon Prime, and other small players in the space. Why not create a super app culture where these small players are at a good stance, and get into SPACs and then create value for themselves. Nobody is stopping them, right? If in proceeding in such kind of scenario. So what kind of thoughts do you hold in this area? Harsh, let's begin with you.
India definitely has super apps. I'm not sure how that is related to SPAC. Probably you could give me more clarity on that. But as far as super apps are concerned, you could look at PhonePe. That is already a super app. It holds a lot of apps inside it, and you can use it for all kinds of purposes, right? Paytm is already a super app. If you go into the Paytm, you'll find all kinds of players in there, right from hotel bookings, train bookings, bus bookings, lots of other players are there, entertainment sites are there, lots of other places are there in Paytm as well. Geo Store, a Geo App Store is already a huge super app already in the market, and they're constantly acquiring new apps to be listed on the platform, right? So super apps are definitely there. Could you give me more clarity on how the connection with SPAC is there? I did not follow that.
Oh, actually, I was asking the same question. Like, if the apps really grow to a big size and their profit is really good, and they are looking for getting listed, but hey, some SPAC member just saw that okay, this can be culminated together, and we can bring as a super app, and then we can create a valuation like a part by part, like the parent app gets some kind of valuation, and their child apps get some kind of valuation. So this kind of structure, can we expect these kind of things in SPAC as well?
I I don't really think that kind of structure will be possible, because in super apps what happens is the other apps are kind of listed, but they don't have kind of stakeholding or controlling interest in the company, right? So that is why having a central SPAC of a super app and then having the valuation benefits to the individual apps, I don't think it is regulatorily possible, at least not right now. Maybe if in the future, a couple years down the line, because what happens is, to be listed on that platform, they have to pay a revenue sharing agreement, right? It's going to be in the range from 10 to 20% at the best. So that is how it works on a commission sharing basis. It's not on an equity basis. So that is why even if the large super app goes for a SPAC or for any other form of liquidation, it has nothing to do with all the individual apps, because they'll operate independently. They have no connection with the parent super app, at least right now.
Thank you very much for clearing things out. So yeah, Tushar wanted to add some point here. Please, Tushar, go ahead.
Yeah, so a super app does not have a direct relation with SPAC, but as we speak, this super app phenomena is gathering steam in India. Tatas are out there buying 1 mg, as one of the components of their super app. They want to buy Big Basket as another component of their super app. Reliance Jio, as Harsh said, wants to create a super app, and that's why one of the reasons why Facebook and Google invested in Jio was because of its super app ambitions. I mean, just look at WeChat of China. I mean, you have, it's mind boggling, 920 million subscribers. The entire entire buying experience, entire services and product experience, entire fintech experience happening through the app, the entire e-commerce activity, entire search, entire chat, everything happening through one app. I personally believe that without the support of a strong government, creating a super app is very challenging, especially in open and free economies. Because there is so much of money chasing different business ideas. Like, Paytm is, as Harsh said, is valued at $15 billion. Now, somebody wanting to open a super app has to compete only within the fintech sector with Paytm. It has to compete only within the grocery sector with Big Basket. It has to compete with the e-commerce sector with Flipkart and Amazon. It's not easy. More than the money required, it requires a lot of accommodation from the regulator's side, that they are willing to allow a single platform kind of monopoly. One big benefit of having a super app is that one can, maintain the sanctity of the country's laws and regulations, and not allow parties and apps from different other countries to interfere with your governance, your rule of law. And it also allows for better direction to the people of the country through one app. Like, I remember when COVID had struck, so the Chinese government had beautifully put red, green, and yellow zones using the positioning data available from WeChat, and guided its people as to where they should avoid to go, and stuff like that. So that kind of very dedicated and pinpointed directions are only possible when you have such kind of a super app. But beyond that, I feel it is very challenging to create a super app, and although it would have a big utility if it is created eventually.
Great, great. So finally, William, what are some of the technical challenges that we see in regard to SPACs and this super app kind of thing? From hearing from Tushar and Harsh, do you want to add something here?
No, from a spec perspective, we don't really want to know the technical part of how the apps come. But if a super app like Grab, which is now in Malaysia, so Grab is one of the best super app now. I use Grab for cars, for food. I can buy insurance. Okay, I can buy grocery. I can buy toothpaste, for example, and it's delivered to my home within 15 to 30 minutes, right? So if this kind of company they approach us, of course we will present immediately to the board, and of course try to convince our shareholders to get to do the deal, right? So it depends very much on the app itself. Okay, yes, a lot of super app might go through spec because specs are a lot of established specs have billions of dollars ready in the bank account, right? So if you happen to be a shareholder in a super app company, whether the super app makes money, it doesn't matter, right? So most of the super app doesn't make money yet, doesn't generate any much profit yet, but the potential is there, the prospect is there. Okay, so it's just like Amazon. They are not profitable until the last 5-10 years. Okay, so if there's a chance to work with a super app, and if they want to inject our spec, we are very very interested. Okay, but in terms of the overall perspective on super app, yes, every country or every region will have a super app, right? So it's very local, right? So for example, if you look at Uber and Grab, right? So after a few years of fighting, Uber eventually merged into Grab, right? So they sold the system and the database of customer to Grab, and they becomes the shareholder of Grab, right? So there's a lot of good super apps coming out from the Southeast Asia region. I can't comment on other countries, but at least from Malaysia, where we are near to Singapore and Indonesia, there's a lot of good unicorn super apps. Yep. So of course we will be happy to look at those companies. Thank you.
Thank you, William. Coming back to the closure of this show, we heard a lot about SPACs. We heard a lot about the regulatory players. We heard how SPACs are beneficial. What are the possible risks and dangers that are involved in SPACs, and what kind of deadlines do the startups or the getting to be listed companies will face once they come into SPAC circle. So with this, we are coming to end the show. I hope all our viewers have enjoyed this. So it was a great knowledge sharing session. Heard a lot, streamlined a lot, understood a lot of things. So before we move on, any few points or anything you were Tushar, Harsh, or William, you guys want to add?
I can only add that all those SPACs looking for acquisition targets. We work very closely with a lot of tech companies. We are working very closely with the Israeli blockchain company, with the agri-tech companies from APAC region, fintech companies from Singapore. We have Dubai-based robotic company as well. And given our experience in the last 6 years across tech and across these companies, we would welcome any SPACs to approach us, and we can definitely come in and help there. Thank you, Amit.
Thank you, Tushar. Thank you, Tushar. Harsh or William, do you guys want to add something here?
Yep.
Yeah, so
We look out for new opportunities. We are still active spec looking out for deals. And if anyone wants to do a UK spec or US spec, we are more than happy to speak to you. All right. So yeah, looking forward to meet new people. Thank you.
Thank you, William. Yeah, Harsh,
yeah, so
few final words.
So SPACs are still at a nascent stage. We'll still have to see how the regulations are working across different geographies, right? And it is a very complex procedure. It's not going to be very easy picking it across most geographies, right? So we still need to see how it evolves. At the same time, if there are any SPACs interested in any Indian startups they have a mind with, right? We definitely have a bunch of, we've invested in over 60 startups. So we definitely have a huge portfolio and a huge repo with startups across the country. And if they need incorporation outside India, we can help set that up so that the SPAC procedure becomes easier for them as well. So we do offer all those end-to-end services for a lot of companies. So if they want to acquire any startup, we'll be more than happy to reach out to SPACs, as well as any startup needs any help regarding that, they can reach out to us as well. Thank you so much.
Thank you so
And
much, Harsh.
I'm available on LinkedIn at Harshetia. Just feel free to drop me a message.
Yes. Thank you, Harsh. Thank you, Tushar. And thank you, William, for this wonderful knowledge sharing session on SPACs. We will be having more of this kind of shows and more on this knowledge sharing sessions over coming times. With this, I want to end today's session. Thank you all, and thank you viewers for looking at our show, and keep watching. And if you have any show that you want to listen about, or any topic that you are specifically interested around fundraising or investment, please do let us know. Please do let me know. You can reach me out on LinkedIn. My name is Amit Das. So yes, you can reach me out on LinkedIn, and you can always connect to me and talk to me. I'm always available. I can always suggest you a few things, and I can always bring your startup to our network of investors to the way forward. So yes, with this, I want to end today's session. Thank you all. Thank you everyone for
Right.
watching.
Thank you.
Thank you,
Bye
Thank
bye.
everyone.
you.
Great
Thank
session.